How's it going, everyone? It's Sam. Today, a lot of people are wondering if the stock market's going to crash. A lot of people are wondering about a correction. A lot of people are scared. A lot of people are excited. I think there's a lot of different emotions out there. But today I want to tell you about a story by Warren Buffett, kind of explaining what he thinks about the stock market and crashes going on. He said this just last year in 2020 after the market crash back in March. This is something that I actually made a video on maybe about 6 months ago when there was another correction. But I want to bring it up to you again because I think this is really valuable for a lot of people. And I think a lot of people will find value in it. I think a lot of people will feel some kind of safety in the words that he's spoken. And, I'm no Warren Buffett, but I'll do my best to explain his thoughts to you guys. Now, if you guys like this, please leave a thumbs up. Please hit subscribe. Share this to anyone else that you might know that is kind of fearful in the market, and stay through to the end because I think all of this is going to be really relevant. And also, there is a link down below. I just want to say this. If you want some free money, there's a link down below to WeBull. You can sign up, deposit $100, get some free stocks. There's also a link down there to BlockFi. They're giving you a bonus if you sign up and deposit a certain amount. You can get up to $250. And they pay you 8.6% interest. So it's really interesting on days like this where maybe you want to have a little bit of your portfolio in something that pays 8.6% and isn't volatile. I actually have a video on that coming up here soon. I haven't decided when I want to release it, but that's something to consider too. There is a link down there if you're interested. Now, Warren Buffett has been someone that's gone through a significant amount of crashes, corrections. He's seen a lot, and I feel like his voice is really a voice of reason when it comes down to this kind of thing happening, right? Market corrections, market crashes. And basically, he goes through this scenario. Let's say you buy a farm. You buy 160 acres of land, and you buy it at a certain price. You buy it because you figure out how much it will yield over the coming years. There are some years where it doesn't yield as much, whether it's corn or wheat or whatever you produce. And then there are some years that you have really good years, but overall it kind of settles in the middle. You figure out an amount that you want to pay per acre, you buy it, right? So you buy it, and then you come up maybe the first couple days and you meet your neighbor, and he is kind of an odd fellow. He comes up to you every day and says, "Hey, I'll buy your farm for a little bit less than you paid for it the day before," or something. Let's say you bought it for $1,000 an acre or something. I'll buy it for $995 an acre. Let's say the next day he comes up and he says, "I'll buy it for $1,100 an acre," or "I'll sell you my farm for $1,000 an acre," or $950. All of a sudden, one day it's $800. The next day it's $850, and then it goes back and forth. Now, this guy is a little bit funky. He's a little bit weird, You bought the farm because you wanted to get the yield. You realized how much it was worth, or you had a good idea for how much it was worth. But this guy is someone that just comes all the time. Now, this would be actually something very valuable to have, right? If you're a farmer and there's someone that's always giving you offers, you don't have that in real estate. You don't have people like that, and there's a lot more to it compared to stocks. The inherent value, or the inherent capability of the stock market to do that for you should be something that's good for you, right? That should be something that provides liquidity. That should be something where, hey, you can be the smarter person. You can decide, okay, no, it's less than I paid for it before, and I felt good about it then. I don't have to sell it. There's no reason that I need to sell it. I'm looking for the long term. Or, hey, this guy's kind of crazy. He's giving me a good offer right now. I can put some more money towards it and buy his farm. Now, a lot of people use this as something that's actually negative, right? They hear, okay, someone says that it's only worth $850 an acre instead of $1,000. I've got to sell it today. Even though there's an inherent value, right? The company should be producing cash flow down the line. Whether you're buying a new company or an older company, there is some kind of inherent value to it. They bring some amount of value to the table besides just speculation, hopefully. Now, there are some stocks that are more speculative than others. There are some stocks that people are just buying because they think they're going to go up. Right now, this is kind of the environment we're in, and this is me saying this now, like with SPACs and with some other more speculative plays. Warren doesn't really buy those companies as much as cash flowing companies, but he makes a valuable point. that a lot of people use this to their disadvantage, where they feel like they have to sell because certain people are paying a certain amount. They're worried that they're going to pay less over time. And I think as you get into individual stocks more, you realize that there is more risk in that way, right? So if you're buying the S&P 500 or a good cash flowing company, there's less risk on the downside, but there's also less return on the upside compared to a bunch of individual stocks where maybe they just have an idea and they still have to execute, and you're banking on some of the hype to help push them through, help them with different cash offerings. But I think what he's saying is very valuable in terms of the entire market, right? I think when you look at the market in general, I think a lot of newer investors are often very scared when they hear about a stock dropping. Other people, maybe some more veteran investors, realize, oh, it's bound to happen at some point. Maybe I'll pick up some more shares, or maybe I won't pick up more shares even though it's below my cost basis and I have cash, just because I don't want to increase my position size too much. Like for me, I'm kind of excited about this market crash. I mean, unless you're retiring before we see an uptick, this should be good for you. Even if you don't have any cash, it won't matter. So if we dip, let's say we dip 50% and you have no cash, which, I would never suggest that. A couple weeks ago, I did a video talk about how much cash I hold. But let's say it dips, then it comes back 3 months later. Well, you didn't really lose out on anything. Hopefully you're investing along the way. But if you're retiring in that span, that's not good for you. But otherwise, it's to be expected. We always expect corrections. We expect market crashes, but we should be able to take advantage of them by dollar cost averaging, by putting more money in the market, by averaging down our positions. That's something that I'm looking to do. Now, I explained in my video this morning, I am throwing a little bit of money in at a time. I don't want to throw it all in today, because if we keep on dipping, that's not good. I realize that I can't time it perfectly. No one can time it perfectly. All the people that said, oh yeah, we are bound for a correction, like I did a video last week, and I was more just trying to say, the stock market could crash at some point. It will eventually, right? I wasn't calling like this week or next month or anything, but it's bound to happen eventually. No one can call it, but we need to take some precautions with some cash sitting around just in case it dips. And just being comfortable, right? Being comfortable with that dip. I know a lot of people are, hit really hard today, and it's tough to remember all this. But I think these words from Warren Buffett really help. The last video I did on this, a lot of people liked it. A lot of people felt like they got value out of it. I had a really good like to dislike ratio. So I hope that you guys see this too, where these are uncertain times, but over the long term, we'll be fine. And hopefully this is actually good for us. Hopefully we can take advantage of this dip and buy some shares, right? Especially if you're not too leveraged. But I want to hear your thoughts on this down below. Let me know what you think about Warren Buffett's story. Whether you think that it's a very good thing that we get all these quotes all the time, or whether you think it's a disadvantage. Again, there is that link down there to BlockFi in case you're interested in a steady 8.6% on some stablecoin, or 6% on Bitcoin, and 5.25 on Ethereum. And there is that link down there to WeBull. If you guys want to know exactly when I buy and sell stocks, I did buy a couple stocks today. You can check out the link down below to Patreon. Thank you guys, and I will see you in the next video. Bye.